Titans, we got the breakout we wanted from the falling wedge pattern we called on the 4-hour time frame, and things are looking good at the moment. But what do we need to see happen as we head into the weekly candle close this Sunday? Let's talk about all this and more today. Kevart, hit that intro. Let's kick it off with the Crypto Fear and Greed Index. Just a quick note that although the name of this index would suggest that it's generally all crypto, the gauge primarily fluctuates based on the movement of Bitcoin. Today we are at 66, which represents greed. So to generally recap this week, we've pretty much been staying in the middle range of greed ever since the pullback we had for Bitcoin heading into last weekend. Now let's move on to what will be your final reminder that the Bitcoin halving is in less than 12 hours. For those of you who are new to crypto, this event marks the time in which the Bitcoin reward for the miners will get cut in half from about 6 Bitcoins to about 3 Bitcoins every time a block is successfully added to the Bitcoin blockchain. And to put this into perspective, as of this time, only about 900 Bitcoins can be mined per day. Therefore, after the halving, this will get reduced to about 450 Bitcoins per day. Now think about supply and demand for a minute. Once the halving kicks in, less Bitcoin will be able to get mined per day, but we now have large institutions buying, and even Hong Kong is getting involved with their ETFs. The bottom line here is that we're seeing increased demand and the daily supply is about to get halved. And that is why the Bitcoin price is expected to go parabolic very soon. Now, if you're having a hard time visualizing this parabolic effect I'm referring to, just take a look at what happened in every previous cycle here after the halving event on the BLX chart. Here's cycle 1, here's cycle 2, and here's cycle 3. So let's see what happens on the 4th cycle now. Moving on to the Bitcoin liquidation heat map. Just a quick reminder that this map tracks the short and long position liquidity for Bitcoin in areas that are either light or dark yellow. The yellow areas will either be above or below the current price action, which are the short and long positions respectively. Zooming out to the monthly time frame, we can still see that there is about $1.2 billion of leveraged liquidity right below 72K. And like I said last time, maybe not today and maybe not tomorrow, but at some point I would expect a massive short squeeze up to 72K because Bitcoin always follows the liquidity. Now let's take a quick look at the Bitcoin ETF flow table. Just a quick reminder to anyone new to this table, we're tracking how much Bitcoin the institutions such as BlackRock, Fidelity, ARK Invest, etc. are buying to back their ETFs based on the millions of dollars they're spending per day against how much Bitcoin is being sold by Grayscale in millions of dollars as folks are switching out of Grayscale Bitcoin and into the ETFs. Yesterday, April 18th, we had our 5th consecutive day of negative outflow totals, which was only at $4.3 million. So generally speaking, we've been seeing nothing but negative outflow totals this whole week. And while that may not seem like a good thing, I think it makes perfect sense since we are currently consolidating at the moment, as we'll discuss in the TA segments. The key thing for me to see here is that BlackRock, who has the most Bitcoin of any of the other institutions so far, has never stopped buying this whole time. So if the smart money is still buying, then that is a good sign to me. Guys, this is your reminder that we are only 34 days away from a decision to be made by the SEC for the first Ethereum spot ETF by May 23rd. Don't sleep on Ethereum because you know what happened to Bitcoin leading up to the approval of the spot ETFs back in January. All right, now let's hit the charts. Looking at Bitcoin on the 4-hour time frame, the falling wedge pattern that we pointed out on Wednesday had a breakout to the upside yesterday with a successful retest afterwards, and now we are seeing the breakout continue. I do want to point out, though, that since posting the video on Wednesday, a slight adjustment was made to the lower leg of the wedge after seeing some of the wicks produced from the newly formed candles afterwards. So if you're following along on the charting with us, just note that the yellow line here is the adjustment that was made to this original white line. And as mentioned last time, the goal for this breakout is to get back to about 71.3K, but that may not happen immediately. Switching now to Bitcoin on the daily time frame, we've been saying since Monday that Bitcoin is trading within a rectangle at this time as we head into the Bitcoin halving that is set to occur tomorrow, April 20th. And as you can see, every time we come down to this support zone, we've been getting a good bounce back up at these yellow arrows here. So there appears to be very strong demand for Bitcoin at around 60.8K. And as we mentioned all week, the key here is to continue closing the daily candles above 60.8K in order to maintain this consolidation pattern. And finally, zooming out to the weekly time frame now for Bitcoin, there are two things we need to focus on here. The first is that this weekly candle marked by this yellow arrow here continues to stay on top of this purple line, which is the 8 EMA or exponential moving average, as we've seen it do since last September. Earlier this week, we did temporarily fall below it, but we are now back above it. The second area of focus is to see this weekly candle get back into the 65.5K to 69K zone, which is now resistance at the moment. If both things happen by the close of the weekly candle this Sunday evening, then I'd say we're looking pretty good. Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.